record net income, robust headline growth. Yet, the share price tells a colder tale. Filinvest Development Corporation delivered 15 billion pesos in net income attributable to parent for 2025, up almost 24%. Consolidated net income surged over 20%. Total revenues and other income soared to 120.6 billion pesos. By all accounts, a triumph most companies would proudly advertise. So why has the market withheld its applause? Within 3 months, FDC stock slid over 10%. In 6, down 12.5%. And for the year, the decline persists. This is a classic case of the income statement smiling while the share price frowns. Beneath the headlines, investors are searching for substance. The power segment contributed solid profits. 4.9 billion pesos net income, up 14%. But its revenues contracted sharply, dragged lower by reduced spot market activity and weaker coal cost pass-through rates. Profit was preserved by lower fuel and operating costs, not by top-line momentum. Markets tend to reward earnings powered by healthy revenue, not just cost controls. Banking remains the crown jewel, powering nearly 40% of group earnings. East West Bank recorded 9.2 billion pesos in net income, up 21%. Yet credit costs surged, with provisions for expected losses rising sharply. Investors are asking if the bank's growth comes with higher risks, and whether future profitability can truly keep pace. FDC's balance sheet has improved. Debt is down, leverage ratios look better. Yet cash reserves have thinned. Net cash dropped by almost 13 billion pesos in 9 months. Deleveraging brings strength, but a leaner cash cushion can make investors nervous, especially in a rate-sensitive environment. Top-line growth was modest. Real estate and hospitality performed well, but couldn't offset power's revenue drop. The result? Profits rise faster than revenues, a trend markets generally reward in the short term, but become skeptical of if sustained. Structural market issues also play a role. FDC's free float remains thin, and trading turnover is low. A small public float means even strong fundamentals struggle to attract institutional buyers, keeping valuations compressed. The lesson is clear. In the market, record profit is not always synonymous with a higher stock price. Investors want proof that growth is not only profitable but truly durable. FDC illustrates the Philippine holding company paradox. Strong earnings, weak enthusiasm. Until the story behind the numbers delivers greater confidence, the market will demand more than headlines.